Hello folks, this is Raj Sastri from Raj Option Trading. Today is April 13th, 2021. I want to talk about one of my favorite stocks. It's iRhythm Technologies, ticker symbol IRTC. It's in the healthcare medical instrument segment. And one of the main benefit of this company is really this device this company produces to rectify your heart rhythm problems. It's very easy to use and it works all the time. With that, according to this research from globenewswire.com, medical devices market is going to grow at a CAGR compounded annual growth of 5.2%. And this iRhythm Technologies is very well positioned to take a good chunk of this growth rate. With that, let's dive in, understand a little bit more about this company. So, iRhythm is really redefining the way cardiac rhythms are diagnosed. So with that, they produce various sensors, single-use variable sensors. They have an AI-based platform. They also produce actionable digital report. And a lot of people have got heart rhythm problems. It occurs at various times, and there are issues when heart does not work properly. So that's where this device comes in very handy. It will basically solve the problems around irregular heartbeat or slow heartbeat. So with that, this company has got some accolades. One from NHS. They're saying, it's a winner of Artificial Intelligence Health and Care Award. That's a very good, award to, for this company. And it's for this Zio, device. And also they got one more award from NICE. Basically, Zio XT received positive recommendation. In a nutshell, their cloud platform got the award, and also their device itself has got the award. Which is very good accolade from coming from these highly regarded companies. So with that, if you look at this here, um, $1.8 billion is the existing market opportunity. That's basically the one you see here: symptomatic diagnosis, patient disease management, and they can expand the TAM. They can look at high risk patients, general population. So this is where the total addressable market can expand. And they got Zio product line, Zio XT and Zio AT. So it can really help with 5 plus million tests and very proven technology. And patients love this, and doctors also love this, and it's being recognized in the industry. So with that, today, actually on Monday, this company crashed big time. Stock really crashed around 29 to 30% just off the open bell. So with that, the main reason for the decline is really there is a issue around the Medicare reimbursement by Novitas, one of the contractor for reimbursement. And they are reducing the rates, and that will negatively impact the first quarter revenue by $13 million. So all these medical device companies and biotech companies, whenever there is an issue with the FDA approval or an issue with the Medicare or a reimbursement as an example, stock really takes it very badly. And iRhythm also estimates the full year 2020 revenue would be reduced by 15.6%. So that's a really steep reduction. And CEO also says he's very disappointed with this Novitas, and he's also going to work hard to secure more reimbursements. So he's not going to keep quiet. He's going to really work with the authorities and see if we can get better reimbursement rate. So with that, let's jump in into the company itself. iRhythm Technologies, they are a leader in digital healthcare, and they provide ambulatory electrogram or ECG monitoring products for high risk patients. And they got various products: ZXT, AT monitor, single use, wire free, wearable sensor. So it's really good company, helps with the heartbeat issues. And stock price is 85.71 and market cap is 2.50. So as you can see here in the chart itself, um, I think I got the CEO wrong. Let me remove this. As you can see, from the stock chart itself, its stock took a very, very big dip here. As you can see here, huge dip from a 250 back in January all the way to $85 as of today. That's a very huge hit, and I think it happened slowly, but pretty suddenly it happened, as you can see here, all the way from December January timeframe to now. So with that, if you look at revenue itself, they got good revenue to $65 million trailing 12 months, and revenue growth is good, 33%. They got a good amount of cash. They're not going to run out of cash, and they have some debt which is totally manageable. Operating cash is negative. Free cash flow is also negative. So overall, as you can see, our chart looks really, really ugly, especially with the today's, this week's huge drop, and also, January and February drops. So with that, let's look at the CEO. The CEO, Mr. Doyle, Mr. Coyle, he's a very seasoned person. He was in the leadership position in Medtronics. He was also with St. Jude Medical, Eli Lilly. As you can see here, he has been in the industry for long enough. He knows how to navigate these type of issues. Nothing new for him, so that's why he will work through this as we go forward. And big news, iRhythm technology stock crashed 39%. Um, and everybody's talking about Novita's update around reimbursement rate, which is negatively impacting this company because the reimbursement rate itself dropped a lot. So that's the big news. That's why stock dropped big time on Monday, 39% in a single day. That's a huge drop. Now let's look at the company and quick statistics here. These many of these analysts, they are pretty savvy. Whenever stock crashes, whenever there is a bad news, they go downgrade. So that's something known in the Wall Street. But I think we should really see, does it warrant a downgrade? Is there some positive bet that we can make at this point? Stock has crashed so badly. Is it worth investing at this point? These are the questions that come to our mind as we look at a stock like iRhythm. So with that, if you look at the earnings per share, they've been improving from 3.95 negative in 2016. Now it's 1.58 negative. So that is a good improvement in earnings per share. Even though company is not making money, earnings are negative. And if you look at from a sales perspective, year over year, pretty nice sales growth here, or a revenue growth. I like the way they are improving their revenue. I think it's a good looking revenue increase. And the shares outstanding, I think it's pretty okay. Nothing big here. A little bit increased in 2020, but not any significant at all. So overall, I guess the company checks out from a EPS perspective, from a revenue perspective, and from a shares outstanding perspective. And stock, also they had two downgrades here with the JP Morgan and Colliers, and also with this huge news, stock came down pretty hard. And as you can see here, since January, it's got hold and downgrade type ratings. That's why stock really came down. Now, if you look at, when you look at the companies, we also have to look at the competition and see who are the, companies in the related segment here. So here I've got a lot of companies in the same segment. Some of these may not be direct competitors, but at least they're in the same segment and same industry. So with that, if you look at here, I also like some of these companies here. I think we talked about Retractable a while ago. It's 81% sales growth, 1 year, and quarter over quarter 153. And as you can see, your stock has done 450% in 1 year, which is very, very impressive. And off late, as you can see here, in last 3 months, stock has fallen down, but I'm sure they will recover. And as you can see here, other companies here, we got BioLife, which is a $34 stock, nice revenue growth, nice gross margin. NovoCure, same story. It's done very nicely. I think in 1 week they've done 46%, as you can see here. I like this company. I invest in this company a lot. And then we got bunch others like Glucose, again good company, and even AngioDynamics, Cantel, Repligen. It's one of my favorites here. Anytime you see positive 1 year sales growth and quarter over quarter sales growth and a positive gross margin, those are typically recipe for success in the stock investing as we go forward. And Intuitive Surgical also another very good company. I kind of invest in them all the time. And these are some. Then we got some more in the next slide. We got VAR, Varian Medical Systems, again a good company. And here, as you can see, many of these companies have got positive revenue growth and they got positive gross margin. And as you go into our company we are talking about today, iRhythm, $85 stock, very good sales growth on a yearly basis, quarter over quarter basis, nice gross margin. As you can see here, there is a a float here, short percentage is 11%, little high. Shorts are really taking benefit at this point, taking advantage and making some nice money. And it'll not last long. As stock crashes, people like us will buy more share. It'll cause the squeeze. And they have done very badly for the year, as you can see here, minus 70% for the year. So let's see if this is a good opportunity to buy this stock at this point. And then we've got a couple of other stocks here, Dickinson, Hillram. I invest in some of these companies whenever they drop a lot, and it always gives a good opportunity to bounce back. So with that, as you invest in these companies, always look for positive sales growth, positive gross margin, and also make sure valuation is not super high. For these companies, valuation is very manageable, not super high. So with that, let's go into iRhythm, look at the fundamentals here. Stock price itself is $85.71. Market cap is 2.50 billion. And through the quarters, the way to look at this chart is I got all the quarters starting from the latest quarter here, all the way to 9/30/18. Got a couple of quarters to really make sure and decipher any trends. And from a market cap perspective, as you can see here, it's kind of slowly but steadily going up. So all the way from 2.23, it has gone all the way up slowly but steadily all the way till 1231. But now with this huge drop, bam, it's back to 2.50 billion, almost where it started, somewhere in 2018. So, this is where we need to understand is huge drop. Is it worth to invest at this point? And from a share price itself, as you can see here, it also nicely improved $92 back in 2018, all the way to $237 back in 1231, and now $85, almost less than where it started back in 930. And sales, I think they did nicely on the sales number here. Nice acceleration, 38, 42, 48, all the way to 79 in the latest quarter. And I like this sales or revenue acceleration here. A nice acceleration, I love it. And they have been surprising Wall Street with the positive revenue surprises all along, which is really great. And they got some EPS earnings per share perspective. There are a couple negative surprises, as you can see here, but off late they've been doing inline or positive. And they do have good amount of cash. Debt is manageable, not much at all, and nice gross margin. I love this gross margin. They've been pretty steady at this, very nice. And net margin is negative. Company not producing earnings yet. understandable. These companies have to do a lot of R&D and bring these devices to market, which are placed in very sensitive, hard type areas, which is really, they have to do a lot of research here. From a price to sales perspective, I think it got a little pricey, I would say, but not lot pricey. It's manageable. So overall, from expectation perspective, I think the CEO mentioned due to uncertainties and reimbursements and continued COVID-related uncertainties, they are not issuing a revenue margin or a operating expense guidance this time. I think Mike, even back when they announced the earnings, he kind of knew around this uncertainties in the reimbursement. That's why the CEO did not issue any guidance after the earnings statement. So with that, let's look at the earnings itself. We had the earnings, Q4 earnings for their quarter ending December. Earnings was on February 28. So in the earnings, they talked about their Zio platform, significant adoption, continued appreciation by customer. That's a very good thing. And they also had significant upgrade and rollout. Again, good story here. And their technology stack includes the patient database, over 750 million hours of curated ECG data. That's very good here. And they also had some decrease when it comes to gross margin. It's I think it's due to some shipping costs, which is manageable. And they also talked about operating expenses going up a little bit. And it's around the very milestone cost. And they also talked about OPEX. It was a little bit up. And EBITDA, they had positive EBITDA, which is always good. So overall, I feel the company did very well. They have to really manage a little bit around their margin and the expenses a little bit. I think they will control that as we go forward. Nothing major here, with the exception of they did not give a guidance because they did anticipate some uncertainty when it comes to reimbursements. So if you look at this company from a their earnings and the stock reaction to the earnings, as you can see here, stock, they had earnings in February 25th, and it's in line from a earnings per share perspective and revenue beat. After the earnings, as you can see here, stock did badly, 4% down that week, 13% down the following week. And even getting into the earnings, stock was down. So even though company did well because of the guidance that we talked about, soft guidance, company share crashed. And before that in November, they again beat here. Even after the beat, I think they went up 20%, but only to give back some of them, in a week's time. And August 6th earning here, stock went up 62%, humongous surge, as you can see here, from somewhere in 119 or so. I think they went up to 217. So that's a huge 62% surge. I think they did really nicely. Good 8.70% revenue beat and inline EPS. And the earnings in May 7th, same story, stock did nicely. And 27th of February earnings, I think here 27th, somewhere here, it came down a little bit, then went up, came back down again. I think they missed by 15 cents, so that's the reason it came down. And again, one more miss here. So even though they missed, I think stock itself on November 5th, it went up a little bit. So, in general, around the earnings, this company is a little bit unpredictable. That's the opportunity that we have. Whenever it crashes really hard, in this time it's even earnings time and even after the earnings, when it crashes so hard, we should really do some analysis and see is it a good time to jump in and buy some. So with that, let's now look at yearly, monthly, quarterly performance. and see any trends that we can decipher. From a yearly perspective, this stock is a wild rider. So as you can see here, 0%, 86%, 23%, 2% down, 248% up, 63% down. So as you see this pattern, by looking at this, I would not be too much worried about this stock. This stock is known to bounce more than drop. So even though 63% crash here, if you look at 2020, it's humongous 248% increase. So this is a very small, crash here. But I think we should really investigate a little more and see what we see from a trend perspective. If you look at the monthly performance here, as you can see here, did badly, bounced back, did badly, bounced back nicely, did badly, bounced back. So that's a good pattern. Only time where the pattern broke is from 20th December onwards. December down, January down, February down. I think this whole year they did not get a good break. It's always down. I think this is where we have to kind of understand, okay, we have 4 down months or 5 down months here. What can we do here? If you look at the weekly performance, same story here, stock down 33%, bounced back some, but gave back more. So this is where stock is a little bit inconsistent. It kind of trades wildly. Good 22% raise here, 22% down here. It's basically up and down. So that's where it pays attention to see when it crashes so hard. On a daily basis, I think as you can see here, huge drop, 39% drop after this Medicare reimbursement news. I think that's where after that, I think today it bounced back and gave some positive number here, which is always good. After a huge crash, you can expect some bounce back, but I think this will kind of consolidate and then it will go smoothly higher in coming months. Now, if you look at the monthly performance metric, the way this chart is organized, I got all the years here, 2021, 2020, all the way to 2016. I got yearly performance, yearly high stock price, yearly low stock price, and all the months here. And March, June, and September, December, these are the quarter ending months for this company. So as you can see here, March is historically a difficult month for this company, 6% down 2020, 21% down 2019, 2% down here. So I think heading into this earnings, we could have expected, hey, March is typically bad month, so it might drop. Then we have to watch out, somewhere in October timeframe. Typically, this is another bad month, and then December, it's again a little bit, we have to watch out. So this is where our opportunity comes in as the stock drops so hardly. This is where we have to wait for a little bit stabilization and a stock to tick up a little bit. Then we can jump in slowly and buy. So we'll do a little more research, look at some of the technicals and see what we can do. From a technical perspective, this is a chart from Thinkorswim from TD Ameritrade. As you can see here, this is a 1.18-month chart here on a one-day time frame. And they got, implied volatility is really 35.9, I think a little bit lower, understandable. It came down here. And if you look at the moving averages, we have 50-day moving average, 25-day moving average, and 9-day moving average. It's below all the moving average at this point, which is a really downtrend clearly. And if you look at RSI is really low. I think it's the lowest ever in this chart, and it's trying to tick up, showing some signs of improvement at this point. Implied volatility, historic volatility is high, and the real implied volatility is a little bit lower. So with this, even if you want to buy a call, maybe a call option 3-4 months out, stock price is around $85. If you want to do maybe 80, 90, if you want to buy the spread, you could do it, or you could buy the stock option outright, as maybe for $75 or so. So that way you can participate in stock appreciation. So I would typically recommend either delta 70 call or delta 70 or higher if you want to just buy call option outright. With that, from a DMI chart perspective, the blue line is really below red line, and the it's expanding. The gap is expanding. That's a bearish indicator, and the ADX is going up, so that's a bearish indicator. I would like to give it a little more time to see if it can show some upside. But today we had a nice rally in the stock. Probably the uptick just happened, but it's okay to buy in small chunks and accumulate it, and wait for a nice bounce back. Volume average, it's very understandable when stock crashes, volume average always comes down. And even check-in money flow kind of came down. Now you can see some smart money is flowing into the stock. That's why it's trending up, because many of these smart money managers, they have seen these crashes. They have patience to put money and wait for some time. Now let's look at a 10-day 30-minute chart to really see, you know is there any difference that we can notice here. In a 10-day 30-minute chart, we can really see an uptrend here. As you can see here, I think this uptrend is today's uptrend. At least there is some uptrend. Even though it's a little bit easy to consistently call it's going to be uptrend, but at least there is a good consolidation and there is some uptrend that we can notice here. And RSI, relative strength index, we could see a nice uptick here in the RSI. That's also good. And implied wall, it's kind of dropping, which is always good if you're an option buyer. And DMI, you could see the blue line trying to go up. It's above the red line. So at least in this 10-day 30-minute chart, we have a bullish sentiment in the stock. And average volume, it's kind of going up, flat to going up, which is good. People are buying the stock. And check-in money flow, it's really increasing. So that's also a good sign that smart money is going into the stock. Now if you turn into 5-day 15-minute chart, it's even shorter time frame here. Here you can see nice uptick here in the stock. RSI is going up, implied wall is coming down. Clearly DMI chart shows the bullishness here. Money is flowing into the stock. On balance, volume is going up. And check-in money flow is kind of it went up, but now it's kind of stabilizing. It's pointing a little bit downwards, which is understandable. Some people might have taken some profit also. So with that, now let's go into option chain itself. If you look at the option chain here, this stock, its option volume or open interest is not too heavy, as you can see here. 27, 17, very thinly traded in the options market, although there is a 203 open interest, all the way 130 call option, 130 strike. So there are some people who are betting the stock will go to 130 by August 20. So which is a bold bold call. I think they're doing it because they're paying very very low price here, $3.70, or between $3.70 and $4.70. So I think it's cheap to buy a long term and keep it. That's why they're doing it. And from a put perspective, same story, not too much volume here, very low volume. So by looking at this on a cursory basis, you can see there are more calls traded than puts traded. So that's always a bullish sentiment. And now if you look at the option statistics in Thinkorswim, you can clearly see more calls are sold, 2,319 calls, transacted than puts, which is 759. So that makes put call ratio to be 0.32, which is a very low ratio. That's a bullish sign that people are buying the calls, and a small amount of people are buying puts, which is always good. Now let's go into, we looked at fundamentals, we looked at technicals. What should we do now? Should we buy the stock? Should we wait a while? Should we sell if we already have the stock? So what I feel is really, you know, because of this Medicare reimbursement issue, iRhythm estimates their full 2020 revenue would have been reduced by 15.6%. The moment Wall Street listens to reduced revenue, they will always freak out, and that's why company kind of stock plunged very badly. And historically, Medicare is a very good revenue generator for this company. And CEO also said, he will continue to work hard to secure more appropriate reimbursement for Medicare patients. Normally these companies can, do a very good job in lobbying and working with authorities, and working with many of these, well-known contractors. I think there is a good chance Mr. Coyle, may succeed working with these companies to get a better rate. And also by looking at the stock chart, the performance weekly, monthly, quarterly, and even the performance metric, we did see this stock has a history of crashing really hard and bouncing back super hard. As you can see in 2020, it had a humongous, increase in the performance. So with that, I feel like stock is really oversold. And I think it's a very good buying opportunity. I personally, will be accumulating the stock, a little bit at a time, so that way I can participate in this rally or a bounce back. So with that, thank you very much. Happy investing.